tough week ends with a tough Friday. But am I sweating yet? Nah. Let me show you why on the weekend update. Okay, friends, let's talk the market. Here's what you need to know. First up, here's the market the way we've always been looking at it. Red is the S&P 500, orange is the 50-day moving average, purple is the 200. And if you look at where we are, it's ugly. I think we are definitely in our 50-day testing period right now, but most importantly, to my eyes, we haven't broken the 50-day yet. Yes, as I speak, we are below the orange line, but if you'll remember, and I mentioned this last time we tested the 50-day in late March, early May, I said that, well, yes, you can go below the 50-day because as you come down to your moving average, you're typically going to get a lot of chop, but you want to wait until you have confirmation. And typically, the sign that I look for confirmation is a close 3% below the 50-day. Our 50-day is 543, which means that at 531, where we are right now, we are not closing 3% below our 50-day. So we're still alive, and that's good. But here's what I think. There's a lot of stuff that's going on in the market. So let's talk about what's moving the markets and how I think this is going to resolve. Really, there's three things that we want to keep our eye on. First up is economic weakness. That's certainly what we got out of the jobs report today. And, that's what earnings season has been telling us, right? The economy is weak. You're already starting to hear it on CNBC. Hey, Jay Powell probably should have cut. You could have heard that from me a month earlier. So Jay Powell does not listen to the show, and that is to his discredit. But economic weakness is one of those things. But the economic weakness isn't that bad yet. We just got earnings season, and earnings for the most part were fine. Primarily, our risks are on forward guidance and on revenue, but companies have tremendous ability to cut costs to make the numbers work. So economic weakness is something that's going on right now. It's not surprising to me. It was very well telegraphed. We've been talking about it for a while. I don't think that's the whole show as to what's going on right now. I think also, the prospective Iranian response is going to occur this weekend. And this is one of those things, the market doesn't like uncertainty. The people will definitely get out of the way, potentially if a war is about to kick off in the Middle East. I'm going to take the under on the Iranian response. Now, this is a prediction. I could look very foolish come Monday, but Iran and Israel, they've already had some exchanges, and it is very clear that Iran respects the military strength of Israel. I just don't think that they're going to launch a full-scale assault. It would mean the end of Iran and not Israel. So Iranian response, this is going to be cleared up by Monday, and I think it's going to be more mild than what everyone is sort of like fearing as of this point. Then finally, this is a weird, wonky one, but we have a very strong Japanese unwind happening. Now, I'm not going to tell you what the Japanese unwind is. It really doesn't matter. But the bottom line is there were some traders who were caught offsides in Japan. These were very big traders. We're talking about like trillions of dollars. And so what's happening is they're getting thrown out of the pub on their nose. And so whenever this happens, there's always sort of like a puking onto the market. And that's really what we're seeing today. And that's really what's been happening all week. And so if you look at what's moving markets, by Monday, I expect 2 out of the 3 of these things to either be resolved or mitigated. I'm not saying that they need to be better, right? Like the Iran-Israel thing is going to be ongoing for a little bit here, but the uncertainty around what's going to happen for 2 of these 3 events, the Japanese event and the Iranian event, is primarily going to be taken care of by Monday. And so then all we have remaining is the economic weakness, which, as I said, like it's there, but it's not this bad, not yet. So I'm actually fairly optimistic here. I actually think that the market, retaining its 50-day, not giving us that full signal, I think there's some intelligence there. And so my spirits are actually pretty high. Very normal for the market to come down to its 50-day during uptrends. Very normal for the market to come down to its 200-day during uptrends, and everything is still okay. We last had a 50-day test in March of this year. We last had a 200-day test in October of last year, and neither of those things ended the bull market. So this is normal jitters for the market. I think there's a lot of stuff going on right now. It certainly is a toxic brew, but I think it gets a little bit less toxic as soon as we get to Monday. So I know it's tough. Hold your nose. Don't open the statements. Everything's going to be fine. And we'll see you next week for the news review. Take care. Okay, friends, that was the video. Hope you liked it. If you found it informative, good, entertaining, I'd love if you could scroll down here beneath the video, And give me a like there. It helps us out with the algorithm. And then if you want to be notified first of anything new that we upload to the channel, if you come over here, click subscribe, you'll be the first to know as soon as we upload anything. Appreciate it. See you soon.